Hi there, you're watching Market Cafe on ET Now with me, Shriyanti Singh, and with me as always is Priyanka Uppal. And over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should be keeping on your radar, and tell you what the brokerages are saying as well. Well, first things first, let's take a look at the US market, shall we, Priyanka?
Morning, Shriyanti. There is no stopping to US market rally. In fact, there's a post-election rally that is taking index to record levels. What we saw on Monday. Monday also, the new week has started and it has started with record levels. Dow gained more than 300 points to close higher than 44,000, while S&P 500, that one finished the session just over 6,000. Now with this, Monday marks the first time either finished a trading day above those respective levels for both the indices. Nasdaq also inched higher, finishing at an all-time closing high for its fourth day in a row. More than 1% it rose. Meanwhile, if you talk about even, there's a lot of action in small cap focused Russell 2000 index also. That one also surged 1.5%. And it's not just the equities. Bitcoin is also soaring to record levels. It's over the moon actually. It's about $89,000 on Monday. There are crucial cues that will come in from a lot of economic data, especially on small businesses, which is due in morning US time. We'll also monitor the key comments coming in from Federal Reserve officials, which includes even Fed Governor Christopher Waller as well as Neil Kashkari. This one is also scheduled. So there are two crucial earnings. One very crucial earning, Shriyanti, would be Home Depot, because that actually reflects the sentiment, the consumer sentiment, and that actually tells you the direction or the strength of the consumer spending in the economy. So Home Depot, this one is closely watched by traders, and the second is Shoplift. But yes, talking about not just even equities, bond market, we did not get any further Q on bond market yesterday because it was closed yesterday. So the level at which it shut shop last week was 4.3%. And similar move we could see in European markets, which also closed higher. A lot of data which has to come in from European market also. There's a inflation figure which has to come in from Germany, and GDP figure has to come in from US as well as UK.
Well, absolutely, yes. Data heavy week coming in. But when you take a look at the oil prices as well, let's take a quick look at what really happened there, because oil prices fell more than 2%. That's the kind of move that you saw coming in after China's latest stimulus plan disappointed investors seeking demand growth in the world's second biggest oil consumer as well. While you did have a supply that also looked set to rise in 2025 as well. When you take a look at Brent crude futures, you're looking at 2.7% downtick coming in on that front. A close near that $71 per barrel level is what you saw coming in for Brent as well. When you take a look at US WTI as well, you're taking a look at a 3.3% downtick coming in for US WTI. Now, it's important to note here that both benchmarks did fall more than 2% on Friday, and it was quite the roller coaster week for oil prices in the last week, in the week gone by. And when you take a look at the US dollar index, of course, you do have the US presidential elections that have got a stronger dollar coming in. That also makes commodities denominated in the US currencies, the likes of oil, more expensive for holders of other currencies, and that's the impact that you're seeing coming in on oil as well. So no surprises there. But in terms of what else is happening for oil prices, in China, you do have consumer prices that rose at the slowest pace in 4 months in October, and you did have oil taking a little bit of cues coming in from there, both in terms of the softer Chinese demand and the softer outlook in terms of Chinese demand as well. You do have Bank of America that is adding that supply disruptions may be offering opportunities for OPEC Plus and its allies to expand supply, and the supply situation is also something that we'll be monitoring closely, Priyanka.
Okay, now let's just quickly get you all the events which needs to be kept on tap for this whole week. We have in India, we have CPI and IIP figures to watch out for today, as well as WPI figure that comes a day post. It's a truncated week, so we have only four trading days in this week. But then there's an important cue which has to come in from Maharashtra election, which is the polling will start on November 20th, and 23 is the counting day. But in US, there is also the PPI jobless claim, retail sales data, that all has to come in this week only, and along with that, GDP figure has to come in from US and UK, and Germany inflation has to come in this week. But then in China, there's a retail sales data, their IIP and their PPI. Now, China also tells you the strength of the global slowdown or global pace. So this one is also to be monitored very closely.
Well, absolutely. Lots of cues that we're keeping our eyes on. But moving on, then let's get you some headlines. Then Donald Trump's victory in the US elections has raised the specter of higher tariffs on China, but it may not be the only Asian country that faces this predicament, according to Goldman Sachs. Now, the note says that while the US bilateral trade deficit with China has decreased somewhat since the Trump administration, deficits with other Asian exporters have risen significantly and may come under increased scrutiny as well. Now, additionally, you do have Goldman Sachs also believing that the Asian trading partners might try to deflect attention in various ways, for example, by shifting imports towards the US where possible.
All right, talking about Bitcoin, which is actually over the moon. It has soared through a record levels above $82,000 on expectation that cryptos will boom in a favorable regulatory environment following the election of Donald Trump as US president and of pro-crypto candidates to Congress. Now, the world's biggest and best-known crypto asset has now more than doubled from the year's low of $38,505 mark and was last at $82,236, having earlier touched a record high of $82,527.
Alright, then let's get you an update on some euphoria coming in the US markets. And the pocket that I'm talking about is Tesla shares that are at the highest level since April of 2022, with investors piling into bullish options bets on the stock. Now, Tesla did hit its highest level in more than 2 years on bets that CEO Elon Musk's close ties to President-elect Donald Trump may somehow benefit the electric car maker. Now, Tesla's contracts were the most heavily traded options on individual stocks yesterday, with almost close to 2.5 million contracts changing hands by noon.
All right, in the meantime, the euro dropped to its lowest level in nearly 7 months against the US dollar yesterday. And this is on the back of investor worries about possible tariffs by new White House administration, which could hurt the euro area's economy. Now, the euro has continued a downward trend since Donald Trump won the US president election last week, sparking concerns over possible tariffs by his incoming administration.
Rather than moving on, Rupee hit its record low at the 84.40 versus per dollar levels. Now, this makes it a 1.5% drop in this year itself. But India is not alone. We see other regional currencies, the likes of Chinese yuan, also weaken against the dollar. Now, this can be attributed to Donald Trump's victory in the presidential elections. But what else is really behind it? What are the factors fueling this particular move that we've seen coming in? And what will the Reserve Bank of India then be doing to help all of this? Let's also go across and listen in to what Anand Rathi's Naveen Mathur as well as Arnab Das then had to say about the rupee's depreciation.
To hold on to the decline or the depreciation of rupee against the dollar, the RBI did intervene, but they didn't intervene to a large extent very aggressively, as used to be the case earlier, because of maintaining the export competitiveness. The flip side of this is definitely the imports. We import about 70 to 75% of our oil consumption. Now, with the policies historically and particularly in the previous Trump regime, there have been the production surge for the crude oil in the US. So net importer, as the US has been for decades or the centuries, became the exporter of the crude oil. I think with that particular policy continuing and the technological advancement which the US has undergone in the recent past for the shale oil and the gas, I think the export orientation would be something to watch out, which might keep the oil prices in check.
India is in a relatively good position. There hasn't been that much currency depreciation. I don't think this will be that much of a challenge for India at a macro level. There may or may not be, here or there, this company, that company, very specific examples or difficulties. But I think the general story in India is pretty strong. I think maybe the currency is in a relatively good place. Maybe the equity market is a bit rich, compared to other countries and compared to the history of the stock market in India itself. India is in a relatively good position. I would say pretty well hedged with regards to Trump or some other outcome in the U.S.
All right, moving on. Seems like only the dollar index is on the up move. Rest of the currencies are facing some headwinds. But moving on, fast-moving consumer goods companies, FMCG companies, faced with the prospect of galloping raw material costs following a rebound in domestic food inflation, now are resorting to cut-corner strategy, and that helps them absorb input overheads as well as lowers the risk of eroding consumer demand. Asta Chopra brings us the details more on this.
Consumer prices for fast-moving consumer goods are poised to rise in the line with increases in their cost of raw materials, particularly palm oil, coffee, tea and cocoa. Prices of food-based FMCG like snacks and bakery are likely to go up, in line with an increase ranging from 15% to 50% in the input costs, according to Parle Products. Choices before FMCG firm will be to increase the price of bigger packs but reduce the grammage of the smaller packs. Some FMCG companies are likely to resort to this method by December, Parle told ET Now.
The food inflation debate was once again rekindled. There were talks about a sharp uptick in the fruits and vegetables. This is cause for concern. We ourselves face a difficult situation as far as cocoa and coffee is concerned. The pressure points are coming from megacities and metros. The last quarter was also afflicted by a lot of natural disasters.
The reason why we've taken the price hike is we've had a record rainfall in Mithapur, which is where we produce our vacuum evaporated salt. I think the highest rainfall recorded since 1929. And because of that, we had a shortage of brine and therefore needed to buy brine. And therefore, the price hike is more to compensate for the cost increase. I don't think you'll see significant movement on the margin front. On the packaged beverages front, in tea, while costs have gone up 30%, we've taken gradual price increases. Keeping the consumer in mind. Second is keeping competitive dynamics in mind. So that there will be a bit of a margin pressure, but we remain focused on maintaining market share and continuing volume momentum. I wouldn't say it's a price war at play. We have started taking we've probably taken 30% of the cost we have passed on to consumers. Normally, you wouldn't want to shock the consumer with a very steep pricing at one shot. And therefore, you would see graduated price increases, different across geographies, different across pack prices.
Global prices of palm oil, a key raw material in the products like bathing soaps, cooking oils and beauty products, touched the highest since June 2022. Supply concerns led to a jump in international prices of other commodities such as cocoa and coffee. Customers are at the receiving end, faced with shrinking grammage or a price increase. To be sure, FMCG firms regularly make slight cuts in the quantities of product to cope up with sudden spike in the commodity prices.
Alright, then that was a lowdown coming in on what cutting corners really looks like for FMCG companies, especially with those higher input costs. But time for a very quick break on the show. When we come back, we'll take a look at how the Asian markets are faring, so don't go anywhere.
You're watching Market Cafe on ET Now. And now let's get you the latest action from mutual funds reports. What did they do in October month? We've seen that mutual funds have been net buyers and they have the one who have actually cushioned the markets. But Somit is here to tell us that what exactly they did in the month of October. Somit, over to you.
Well, if you'll see in the month of October, mutual funds have deployed close to 41,900 crore rupees in the Indian secondary market, which is way higher compared to what they did in the previous month, which was close to 34,400 crore rupees. Now, if you remove the NFOs, that is the new fund offer, then the amount stands at staggering 37,800 crore rupees as against 24,500 that we had seen in the previous month. Now, they have added exposure when it comes to sectors like financials, healthcare and the IT, whereas they have reduced exposures in the sectors like oil and gas, consumer discretionary and auto ancillaries. And when it comes to the cash balance, that has also improved for mutual funds in the month of October, and it increased to around 5.1% as a percentage of AUM as against 4.9% that we had seen in the previous month, that is September 2024. Now, if you look at stock specific action when it comes to large cap, Tata Steel was a buy for the second consecutive, was among the top buys for the mutual funds for the second consecutive month, while among the sell ratings, if you see, it is Tata Motors sectors which was among the top sell for the second consecutive month for mutual funds, and weakness that we had seen in the share prices of PNB, Zomato, Tata Steel and Reliance Industries. Mutual funds have used that as an opportunity to add more shares in discounters. Now, Reliance Industries stands out among this because that was one of the top stocks bought by mutual funds in the month of October. When it comes to mid-cap, now if you look at Motherson Sumi Wiring was among the top buys for second consecutive month for mutual funds. Vodafone Idea, after a sharp fall that we had seen over the past couple of months, mutual funds have now started to see value and have started to add discounter also to their portfolio. Now, there was a trade-off that we had seen between IDFC and IDFC First Bank. Mutual funds have sold IDFC Limited while they have bought IDFC First Bank, and OMC is a one sell theme that we have seen in the large cap also and in the mid cap also. In the large cap it was IOCL, and in the mid cap it was HPCL, which was among the top sell for mutual funds in the month of October. And lastly, when it comes to the small cap, IEX was the top buy for mutual funds for the second consecutive month. Apart from that, despite a 26% run up that we had seen in the share prices of Paradip Phosphate in the month of October, mutual funds have not shied away from adding more shares in this counter. And Equitas and Manappuram on the sell side were among the top sells for mutual fund for the second consecutive month. And RBI Bank, another lender with the MFI issue, was also among the top sells for mutual fund in the month of October when it comes to the small cap category.
Thanks, Amit, for that roundup coming in on mutual fund activity in October. Moving on then, on the macroeconomic front, you do have a lot that we're watching out for. All eyes are going to be on the CPI as well as IIP data for the month of October and September respectively. Tell you what, Gaurav is standing by with an update of what really is being penciled in when it comes to both of these data sets. Gaurav?
Well, yes, we are set to get the inflation numbers officially, but when we talk about expectations, now investors are expecting this to remain at around 5.8%, which will be highest in the last 14 months. And the reason being that when we look at a weak rupee and at the same time rising global commodities, that could actually attribute to this higher inflation. At the same time, food prices are also likely to remain at a higher bound. When we talk about food inflation, they are expecting this to remain at around 9.6%, and this could be the reason why we may see this inflation remaining at 14-month high level. Apart from that, now economists also believe that rising intensity in the climate risk, weaker currency against stronger dollar could be another risk areas where we should be keeping an eye out on. At the same time, when we talk about core inflation, that is expected to remain somewhere around 3.6%, where we may see some kind of uptick because of the front loading in festive season, and at the same time higher gold prices. Let's not forget that government recently put some import taxes on edible oil, and that could also weigh in on this increase in inflation. Apart from that, when we talk about IIP data, we may see a little bit of uptick. We may see this IIP expansion of around 2.5% for the month of September versus what we have seen a contraction of around 0.1% for the month of August. Lastly, why this data is important is that when we talk about some of the commentaries from RBI's governor, Mr. Shaktikant Das, he said that change in stance does not necessarily mean that we may see rate cuts. And when we talk about rate cuts, we have seen the last rate cuts happening in February 2023, and at the same time we are seeing some global banks cutting their rates, and that is the reason why the IIP data and inflation data is going to be crucial. But overall, we will be definitely watching out on how the official numbers comes and how inflation data pans out for India.
All right, so inflation data as per expectations looks to be coming on the higher side. Thanks very much, Gaurav. All eyes on this data. Of course, after US taking 2 cuts, it's all about now when is India going to take a cut? But then, yes, you're right. RBI governor has shown his hesitance earlier in taking a cut. But then moving on, let's get you some more stories. RBI and Sebi have directed FPIs to obtain necessary approvals from the government and concurrence from the investee companies in cases of acquisition of equity holdings beyond the prescribed limits. Ankur Mishra has more details on this. Ankur, over to you.
Yes, Sebi and Reserve Bank of India has issued notifications regarding the conversion of foreign portfolio investors into foreign direct investment. Now, these norms have been given to give a clarity of the conversion in which the application needs to be made to government, and after that approval, the conversion needs to be done. Now, why it is done? Because as per FEMA norms, as soon as the limit is breached, which is 10% of equity investment of the paid up capital, the FPI limit is breached, and after that either you have to sell from the portfolio, or you have to convert to FDI. Now for that, this notification is issued to give clarity on how the new rules will work. While these rules are effective immediately, the framework aims to enhance compliance as well as transparency in FPI to FDI reclassifications. These norms were there already, but a fresh notification has been given by both the regulators to give clarity to overseas investors on which scenario the conversion of FPI to FDI is done and what are the rules which will apply. Now this reclassification impacts sectors with foreign ownership caps aligning with India's FDI policy, and this is to streamline the investment flows, facilitating smoother transition from foreign portfolio investor to foreign direct investment.
Alright, thanks Ankur for that update coming in. But moving on then, it was a weak second quarter coming in for Asian Paints amid muted consumer sentiment, price cuts, increased discounts as well as an exceptional loss that came in for the company as well. However, the company's management does expect that the price hikes taken in this quarter will be aiding the company in the second half of the year. In fact, let's also go across and listen into what exactly Amit Singhal, the MD and CEO of the company, then had to say about the company's growth outlook.
If you look at H1, we've ended up at about 18.5. So we are still within the overall guidance which is there. The attempt is that in the coming quarter, definitely the full impact of the price increase we have taken will come in. And we are hoping that if there is definitely some stability in the crude prices and we see some amount of deflation, I think we would definitely aim that we are in that band for H2 as well as we kind of go forward. When we look at H2, quarter 3 is, as I said earlier, looking a little bit challenging in terms of the overall numbers. We'll have to see how it pans out. But I think overall, as we go into quarter 4, we should see definitely some improvement happening. Based on that, I think we should kind of really maintain, single-digit volume growth numbers for the year.
So expecting single-digit numbers for FY25 volume growth we're talking about, wherein 0.5% cut came in volumes for Asian Paints numbers. But then let's move on. FMCG major Britannia also posted its number yesterday, came out with a weak set of Q2 earnings with net profit and margin both missing the estimates. My colleague Snehi is here to do the number crunching for us. Snehi.
Absolutely. So it's a weak set of numbers coming in from Britannia for Q2. However, we were expecting a decent set, but the numbers have largely missed what we were expecting at ET now. First up, to run you through the earnings fine print on a consolidated basis, revenues come in at 4,668 crores, which is which is an uptick of 5.3% year over year. However, we were expecting 4,769, so largely in line with what we were expecting. But what's not done well is EBITDA has come in at 783 crores versus our expectations of 893 crores, so a miss on that front. PAT has fallen by 10.2% year over year at 531 crores versus what we were expecting at 630 crores. So big miss on that front as well. And EBITDA margins have also shrunk. We were expecting these margins to shrink, but they've gone down much below than what we were expecting. We were expecting the number to be at 18.5%. They've come in at 16.8% compared to 19.7% year on year. So miss on that front as well. Now the management says that the consolidated sales are up 10.3% year over year. And Varun Berry, the vice chairman and managing director, says that volume growth has been roughly 8%. Now it's a slight miss coming on this front as well because we were expecting this number to be between 10 and 11%. Severe commodity inflation leading to a tepid consumer demand scenario across most FMCG categories is what the company has pointed out. They've maintained an operating margin of 15.5%, and they're committed to investing in capability enhancement, brand development to drive market share and sustain profits. That's the future outlook coming in from the company. Lastly, also they're saying that the agenda of being a total global foods company is progressing well, and the croissant, milkshake, wafer and international business are growing at a healthy pace. But nonetheless, overall, when you take a look at the operating metrics, it's in line on the revenue front, but a big miss coming in on EBITDA, PAT and EBITDA margin.
Alright, thanks Nehi for that update coming in. So weak stat coming in for Britannia as well. And when you take a look at what the brokerages then had to say, Investec is maintaining a hold on the counter. And you do also have Goldman Sachs that is maintaining a neutral on the counter. But moving on then, with the Q2 earnings season in its last lap, let's take stock of how the quarter then has been for various sectors. In fact, Varun is standing by with a roundup of just that. Varun?
Definitely. So, if you look, the overall quarter two earnings are almost over, because out of the 50 Nifty companies, around 47 companies have posted their results, and only 15 companies are there which have posted above estimate results. Other are either in line, below, or mixed. Now, let me take you to some of the sectors which have been in focus this quarter. The first among this was the BFSI sector. Amongst this, the banks have performed well, but it was the NBFC, and within the NBFC space, it was the microfinance space which has done bad. The asset quality has deteriorated, also the provisions were high, and these companies, the microfinance companies, have actually cut their guidance, and the banks which have exposure to microfinance, even they have not performed well. The other space was consumer, which was lower than estimate. Basically, if you look, the higher raw material cost has impacted the margins of consumer space. The volume growth was subdued, and the overall urban consumption has taken a beat this time. That was a drag in overall consumer space. For IT companies, there were signs of recovery. The quarter two was better than quarter one, and the BFSI segment, that has bottomed out. For autos, the numbers were largely in line, but the commentary for the next quarter was actually weak, and this quarter was actually helped, overall sales were helped by higher discounts. For pharma, the US sales were actually a drag on a sequential basis. The Indian sales were actually better than the US sales, and in pharma, within pharma, the healthcare space, that has done well, because amongst the hospital, the ARPU, if you look, they have actually shown good growth. Among the commodity space, metals, cement, oil and gas, they all have not done good this quarter. They were a drag this quarter. In chemicals, the Indian agrochemical space, if you look at that, that has done good. Overall, it was a mixed quarter for chemicals. Real estate, the timely project completions and inventory sales, they drove the overall sales in real estate, although the mall consumption was weak over here. And for capital goods, it was a mixed sector, result quarter for this sector, because the export remained weak due to the geopolitical tension, although for India business, it was okay in capital goods space. So if you look for the overall quarter two results, there were more misses than hits this quarter.
All right, so more misses than hits, and the major of the drag is coming from consumption, unsecured lending, and commodities. Thanks very much, Varun, for all that roundup. We stay for a short break here. More to come on the other side of the break. We get you all the buzzing stocks as well as the brokerage notes. Don't go anywhere.
There's no particular time to rise.
Let's get you some more news and updates, and in fact, Ansh is standing by with the futures and options roundup. Ansh?
Right. So despite of FII being negative in cash market, they seems to be getting a bit positive in future market, because in index future we saw that in the previous session they have added around 2,800 contracts on upside. They have covered some 1,400 short contract, due to which their total long position has inched a bit higher from the 24% to around 25%. Now, if we talk about index, the Nifty gave a volatile session in the previous session. It dipped by around down by at around 24,000 mark, but from there it gave a good bounce to close around flat levels. Now, if we talk about index options, then we are seeing most active call writing happening at that 24,300 strike, indicating resistance around that level. Also, if we talk about index future, then we are seeing that open interest has gone down by around 2%, which shows some short covering in Nifty Bank especially. Also, if we see on option front, then today we have Fin Nifty weekly option expiry, so we may see some good volatility in banking and financial stocks today. So keep an eye on the stocks. Also, we are seeing that very significant put writing has been happening at that 51,500, indicating good support base around this level. So keep an eye on these levels.
Looks like banks could be on the run today also, whereas FI's position in terms of long contracts on the index future has improved a bit. Thanks very much, Ansh, for all that F&O roundup. Moving on, we have Ria joining in to tell us all the stocks that could be buzzing on the back of news as well as earnings. Ria, over to you.
Yes, good morning. So let's take a look at the stocks that are going to be in focus today. We have a lot of companies reporting their Q2 FY25 earnings. The first one is Triveni Turbine, reporting quite a good set of numbers. Now, the revenue has seen a jump of around 29% in this quarter, coming up to 501 crores. We've seen good growth on the profitability front as well. The net profit has gone up around 42% and the EBITDA has gone up almost 50% on a year-on-year basis. We've also seen an expansion on the margins side, very healthy expansion of 305 basis points, coming in at 22.2% in this quarter. Let's also talk about Jubilant FoodWorks though, which has reported quite a weak set of earnings this time around. While the revenue did go up around 42%, we saw a sharp decline in the net profit front, which was a decline of 34.2% on a year-on-year basis. Even on the margin front, we've seen a contraction of around 447 basis points, coming in at just 15.8% in this quarter versus 20.3% in Q2 of last year. There's also National Fertilizer reporting a bit of a mixed set in this quarter. The revenue did go down around 14% on a sequential basis, but the bottom line turned positive. The net profit came in at 12 crores versus a loss of 9 crores in Q1. So good growth there. On the margin front as well, that has gone up around 70 basis points, coming in at 2.8% in this quarter. Let's also talk about Hindustan Copper, weak set coming in for that one. The revenue has gone up marginally around 5% sequentially, but there has been a big decline on the profitability front. The net profit has gone down around 10% and even the EBITDA has gone down almost 20% in this quarter. If you talk about the margins, those have also contracted significantly, down over 800 basis points in this quarter, coming in at just about 29.3% versus 38.2% in Q1. And lastly, we also have NMDC reporting quite a weak set of numbers. The revenue went down around 9% on a sequential basis, and the EBITDA and net profit have gone down around 40% each. So big decline there. Even on the margin front, that has contracted around 1500 basis points on a sequential basis, coming in at 28.2% in this quarter. And NMDC has also approved the issuance of bonus shares to the shareholders of the company in the ratio of 2:1. So keeping an eye out on all of these stocks today.
Well, absolutely. Thanks, Riya, for getting us that list. But it's really just Trump's victory that is the talk of the town, and it's the talk of the town across borders. So let's also decode what this really then means for the global economy. How is it going to impact India as well? Nikunj Dalmia caught up with Mark Mobius, the chairman at Mobius Emerging Opportunities Fund, to decode what's the way forward then. Let's go across and listen in to a slice of that conversation then.
You must remember his first term, he was hit with the COVID problem, and that depressed markets. It had nothing to do with him. That was something because of COVID. Now we're in a situation where he's coming in to revive the U.S. economy, and it's going to be very, very good, not only for the U.S., but for the world. Because let's remember, the U.S. is the largest economy in the world. And if the U.S. does well, everybody else is brought along. People benefit because more imports, more exports. A lot of people talk about the tariffs and so forth. Sure, there will be tariffs, but at the end of the day, the total volume of business will go up. People will adjust to these tariffs. And Trump is going to institute many, many reforms, particularly deregulation. One of the biggest problems facing not only U.S. business, but businesses around the world is government regulation, over-regulation by governments, where governments tie down new enterprises to start again and be enterprising. So that's a real problem, and hopefully Trump will be able to overcome.
Mark, it's also believed that the China comeback when China was ready for a comeback, Trump has also made a comeback, which automatically will have medium-term and long-term implications on the Chinese export economy. So this entire talk of China coming back with stimulus package, could that really fade away with Donald Trump coming back?
Well, China has many tools at its disposal. Unlike a lot of countries where you have to go through a long, drawn-out legislation and debate and so forth, China can say, look, Trump is going to impose a 10% tariff. We will devalue the renminbi by 10%, making the Chinese goods very competitive globally. Of course, other countries might be hurt by that, and they may have to devalue in line with the Chinese devaluation. But the Chinese will find ways to get around these problems. Already they've been building plants in other parts of the world, which, by the way, is a good benefit to other countries, particularly in Southeast Asia. And as you know, Chinese companies are moving to India to produce because this is one way to get around the US tariffs. So I don't think China is going to be hurt very significantly because they will be able to adjust to what the Trump administration is doing.
If manufacturing moves from China, is that good for India? Do you think something could go against the Indian IT sector, which in a sense has been the backbone for the Indian economy? Because these are two moving parts. What comes from China to India and what goes from India to other countries?
Well, first of all, there's no clear path to a high-tech revolution. You've got to take all the steps. You've got to move software companies into India, which already has happened and which is continuing to happen. But you also got to get the hardware into India, and that's beginning to happen. As you know, there've been some massive semiconductor investments taking place in India today. So it doesn't mean that manufacturing will stop or decline in China. What will happen is the high labor input manufacturing in China will move to India and to other parts of the world because labor rates in China are going up, not down, and also the population is aging. So the combination of these factors will be very, very beneficial for India going forward. And I believe India will become a major force in high-tech technology, innovation, and manufacturing. So we're in a very, very sweet spot when we're in India when we look at all of these factors.
Mark, when we spoke to you last, after that, benchmark indices are down 5%. Mid and small caps are down by 15 to 25%. Have you increased your India exposure?
Yes, of course, when the markets go down, it's a good time to be increasing. So when you see a correction, doesn't mean that this correction is over. You'll probably see a little bit more downside, but it's a good idea not to worry about these short-term movements. Look at the long-term growth of the Indian economy, which is continuing. And now with Trump coming in, I believe the global economy would be much better. And that.
Okay, so the global economy would be in much better state after Trump coming in, and India, Mark Mobius was clearly bullish on the long-term prospects for India. Moving on, let's get you some more news updates. At least 11 Kuki militants were gunned down in Manipur's Jiribam district after they attacked a CRPF camp. Now, following the attack on the camp, the CRPF retaliated and eliminated 10 Kuki militants and also recovered several weapons from their possession. A CRPF Jawan was also injured in the fighting. Moving on, the smoke in Pakistan is now visible from space. NASA's satellite imagery has provided a striking view of the widespread toxic smoke over Pakistan's Punjab province, clearly visible from space. This comes days after some cities in Pakistan logged record-breaking pollution levels, with the air quality index crossing the 2000 mark.
Then moving on, US President-elect Donald Trump has asked Florida Representative Mike Waltz, who's the head of India caucus, to be his national security advisor. Waltz is expected to bring a hawkish approach to national security that also aligns closely with Trump's promises of strengthening American security. Moving on, then, Prime Minister Narendra Modi congratulated Mauritian leader Naveen Ramgoolam for his victory in the country's parliamentary election, as incumbent Prime Minister Pravind Jugnauth also conceded defeat. Naveen Ramgoolam, 77, leader of the Alliance of Change Coalition, is set to become the next leader of the Indian Ocean Archipelago.
All right, with this, it's a wrap on Market Cafe, but don't go anywhere because markets take all the action forward.